You're watching the program that identifies market trends, provides insightful analysis, and reliable research. Key elements to help you profit from the pros. Profit from the Pros is brought to you by Zacks Investment Research. Learn more by visiting them online at zacks.com. Welcome to Profit from the Pros. I'm Terry Ruffalo. You know, since this trading week is shortened by the Christmas holiday, we thought it would be a good time to review some of the top financial trends of 2010. But before we get to that, bright spots this week included the Dow closing above 11,500 on Tuesday. That had been viewed as a key resistance point, as the Dow had made 3 attempts to close above that level over the prior 10 trading days. Mergers and tech earnings were another positive this week. Somewhat mixed news on Wednesday, though, that the U.S. third quarter GDP was revised up to 2.6% versus the previous estimate of 2.5%. Now, while better than the previous estimate, a little less than the street had expected. However, data still suggests that growth accelerated in the fourth quarter, and that growth remains supported going into the new year. Our editor-at-large, Steve Reitmeister, can make some details out of this seem positive, mixed news or otherwise, right? I'm sure you can give us a positive take on these GDP numbers.
Yeah, well, I think it is positive. I mean, let's roll back to the summer. We had second quarter GDP numbers coming out, and it was slowing down to what was about 1.7%.
Yeah.
And there was some talk of that GDP in the third quarter could be negative, and then the initial consensus was barely above positive. So there was a lot of fear going into that, a lot of double dip recession talk. So to come in at 2.6%, I'm sorry, folks, is good news, okay? Mm-hmm. And so even when I saw the estimate that some people were expecting it to be revised up as high as 3%, I knew that was not realistic. So being revised up from 2% to 2.5, then 2.5 to 2.6, that's good news, folks. And the momentum is clearly towards the upside for the economy. So I think that we're going to be seeing stronger GDP numbers going forward.
Okay, more slow but steady wins the race. Yeah. How do you characterize this year in terms of the economy, since we're talking about the economy?
Yeah. I mean, last year the stock market rose 28% on the expectation that the economy would rebound. This is the year that it proved out. So one might call it stabilization, one might call it just proving out that the economy has turned around, that there is no double dip. That is the nature of this year, and that's where you get a follow through on last year's bull run, and we're going to get another 12-13% on the market indexes this year.
What about in terms of the stock market? How do you characterize the year in the market?
Yeah, it's kind of, they're all connected in my book, okay? So here again, we're not going to get the big robust returns we did last year, because when you hit bottom, okay, you always rebound much faster. So here again, this is an above average year for stock market gains I think that there was some scary times in the spring and scary times in the late summer when people were drumming up that double dip business. Yeah. That just is not proving out that the economy is moving forward, not at a phenomenal pace, but at a reasonable enough pace to make corporate earnings higher and to make stock attractive.
What do you think some of the top financial stories centered around this year? Some people say they were wallet issues, homeowners, consumers trying to hang on to their house, trying to find work. Others say they were centered on other issues. Yeah,
well, there's a lot of things you can point out to. The fact that the unemployment rate has not improved, and yet we have an economy that is improving, okay? And so that is kind of a shock to some people. How could we have a rebounding economy without the jobs flowing in? But really, if you take a look back, this is the third straight recession that has rebounded what we might call a jobless recovery. So the jobs come, just not till a lot later in the cycle. That you have where corporations cut costs heavily in 2009 and into 2010. But yes, we did finally start to see a slight pickup in demand. I wouldn't call it robust, but a slight pickup in demand. And so these corporate earnings growth numbers are not just cost-driven anymore, which is important because that party always runs out. You need to see top-line revenue growth, and that is taking place. So here again, it all extends to the economy. The economy has rebounded and stabilized. Corporate earnings have rebounded and stabilized. The stock market has rebounded and stabilized.
Companies sitting on a record amount of cash, though, still not willing to spend that cash. You see that changing?
It might slowly start to change. they were very concerned about demand, okay,
Yeah.
and very concerned about hiring, especially because of all the tax issues that were out there and the health care bill. There were a lot of question marks as far as how much it would really cost them to have employees on staff. And so now that some of these things are being settled, we are seeing some signs that the employment is improving, so that some of that money is going into the reinvested in employees, that there are tax breaks for capital spending, and I think we will see an increase in capital spending. And I wouldn't be surprised to see some of that money flow back into dividends to attract investors. So, and of course, they'll do some mergers and acquisitions, but I'm saying that money will not stand on the sidelines for too long.
Okay. Well, we're going to be back at the roundtable with a special two-part roundtable this week. Steve's going to join us there. We're going to spend more time talking about 2010, the year in review. So stay right where you're at. You're not going to want to miss it. Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Here to help us put this year in some perspective, in a special two-part roundtable, are the pros this week: Steve Reitmeister, our editor-at-large, Kevin Matras, market technician, and equity strategist Tracy Reinick. And we're going to actually take some time here to kind of talk about what some of the big trends were, some of the big stories were. Kevin, I'm going to start with you.
Okay.
What do you feel were some of the market headwinds this year, major market headwinds?
I would say the biggest headwind really was unemployment. You know, we've seen unemployment at such a big level, and it's been protracted for so long. I think this is the thing that has just really held the market back. I think until we can see a meaningful improvement in unemployment, I think the market's going to continue to just kind of move up slowly. But once we can see this improvement, and I think it's really happening, I think it's getting ready for the beginning of next year. Once we can see improvement in unemployment, then I think the market will take off. But this has been the biggest impediment this year.
So Tracy, would you view that as also one of the top economic stories of the year? I mean, there's some overlapping, some intertwining here that I'm starting to sense.
Oh yeah, definitely. Because we're all obsessed with the unemployment numbers every month for this reason that Kevin just said, because it hasn't really been improving. We expected it to, and then it's still kind of holding back. Mm-hmm. And then you have the people that have just been unemployed for the longest amount of time that we've seen, maybe in 70 or 80 years. Yeah. So both of those things are combined for the market headwinds, but also, for one of the biggest stories of this year, for sure.
Steve, what about top investment stories? What would you consider to be a top investment story for this year?
That the double-dip recession was greatly over-exaggerated, that the dip to 10,000 was unnecessary, and that what we see now at Dow 11,500-ish is getting back to a more reasonable valuation of the economic improvement, of the corporate earnings improvement that is taking place, and that probably has a bit more upside.
Where do you put corporate earnings in there? Top investment story, top corporate story? How does that fit into the...
If you're talking about the stock market here, for me, some people might take a look at charts. Some people might take a look at fund flows. Everyone's got a little different way of taking a look at it. For me, we are buying corporations. We are buying a stream of earnings. So the corporate earnings picture does tell us what is going on. If we roll back the clock about 12 months, we would see that the earnings estimate for the current year was about $78 in earnings per share for the S&P 500. We have exceeded those expectations, and as we're coming towards the end of the year, that is around $85 per share. So in other words, there has been a 10% improvement in the outlook for earnings this year, and that improvement has rolled over into 2011, for which those estimates have risen from about $88 per share in earnings to $95, $96, which by the way, if I were to put a reasonable PE of 15 on it, you could say the market could easily get to S&P 500 could get to easily to 1,400 and beyond, which would be another 10 to 15% rise next year.
Okay. Kevin, the Fed actions or the Fed actions that weren't this year? Both. There were actions, and then there were actions expected that didn't take place. Where does that rank in your top, let's say, 5 stories of the year?
Well, yeah, I want to address something that Steve said in just a moment, but I think the Fed acted perfectly. They did all of the right things at all of the right time. You know, some people will wring their hands and say that the Fed is overstepping their boundaries and that they're putting too much liquidity into the market, but the market absolutely needed every single thing that they've done, and I think Bernanke has been absolutely fantastic. He's the true maestro.
But you agree that was a top story?
Definitely a top story. One thing I wanted to talk about,
Sure.
you know, Steve was talking about corporate profits, and the one thing that's interesting is that while unemployment was the biggest impediment, the thing that was able to rise above unemployment was the spectacular record corporate profits, and that has been the driving force to the market.
Tracy, you watch the global picture as far as the markets go anyway. What about the debt crisis? Where does that rank? Does it rank as a top investment story, top economic story, or is it a hard one to?
Well, I mean, we saw what it did in the spring when Greece, you know, had its problems, but that kind of went away because that was solved. You know, they were bailed out and all that, and now, right? And now it's spread. You know, we had Ireland and Portugal, Spain are in the mix, but this is kind of muted here at the end of the year. So it is a big story, but its full impact hasn't yet really been felt or may not be felt until next year.
You watched the inflation-deflation picture, Steve. Is that ranked in the top 5 stories this year?
That was absolutely the main reason behind the second round of quantitative easing. The Fed was dreadfully fearful that the growth rate of the economy was not strong enough to create inflation going forward, and they could see it slipping down towards perhaps a deflationary area. I've seen one of the top writers in my field say that when someone becomes the Fed chairman, they take them in for an operation and they make them, you know, completely opposed to deflation. You know, so everything in their body says no deflation. So what's funny is a lot of us who thought that we had a nice recovery taking place in the economy didn't think it was necessary, but because the Fed, and especially the Fed chairman, are so, you know, vehemently opposed to deflation, that they were throwing everything at the economy to make sure that the things picked up and the inflation picked up. And in the most recent producer price index, we do see a whiff of inflation coming around, which probably in 2-3 months down the road will be hitting the consumer price index. So the Fed, it could be said to did do their job there.
This next one's a difficult one, and Steve and I were trying to kind of prioritize it. But the BP oil spill, I mean, had a lot of coverage this year, but can it be considered a top story?
I'll take it.
Just because it had a lot, yeah, I mean, just because it had a lot of coverage doesn't make it a top story from an investment perspective or an economic perspective.
Well, I mean, it was a top story. If I were to, I haven't even thought about it, but let me just see if I can put this into perspective. It was a top story in the sense that there was a tremendous amount of mismanagement. I mean, this was a spill that never should have happened. BP was negligent. I think all the other people that were part of it were negligent, and actually our regulatory agencies were kind of negligent as well. But what I think it turned out, or what people saw, was that, you know, we haven't had a spill like this or any kind of big disaster in the drilling industry for years and years, decades. And I think in a crazy way it showed that we actually are doing things right.
So does that fall in the corporate category as top story?
I think it was more of a corporate because it affected far fewer companies, at least the ones that are actively traded. It affected everybody down in the Gulf, obviously in Florida, and a lot of small businesses down there.
Right.
But in terms of the other oil companies and the other, you know, people who were involved, it had almost no impact on like share prices and things like that.
It was a tragedy that is not much of an investment story because it was very isolated, as Trace was saying, to just a handful of companies, and there was some scare about whether it would be more drilling offshore, but not much of an investment story.
All right, we're going to come back with part 2 of this interesting conversation. Stay with us. Welcome back to part 2 of our special holiday roundtable that puts the year 2010 in some sort of perspective for everyone. And don't forget, at the end of this part of the roundtable, we have top stock picks of the week yet to hear about, so you want to stay tuned for that. So Steve, let's start back with you as far as top corporate stories go for 2010. Where does the GM IPO fall in your ranking system?
That's certainly one of them. I think that, you know, a lot of people agreed with the saving the banking system. But I think there was much greater hand-wringing over whether the auto industry should be bailed out and what happened with GM. And yet here we have an excellent story of a rebound of a company that seems to be reborn and shaking off 30 years of bad management practices and putting out poor cars. And so the government, or us taxpayers, will be actually making a profit on this, and it seems a lot of jobs were saved in the process, and that we do have, once again, I wouldn't call it a thriving auto industry in the United States, but one that has a decent chance of surviving and doing well into the future.
Yeah.
All right, Kevin, in the technology space, what about the iPad, Apple?
Yeah, I got to say, I think Apple is the biggest corporate story of 2010. They have proven time and time again why they are one of the best companies in the world. And what's interesting is I remember reading a story about 10 years ago, and Apple said that they were going to position themselves as being one of the premier individual entertainment companies out there, and I think we've all witnessed them execute this strategy almost flawlessly.
I think I read somewhere where they're going to actually buy Ireland to save them. They're going to call it Ireland.
Nice. That's a good move.
Yeah. Steve's like, where did you read that? Tracy, you follow commodities.
I do.
That had to be a top story this year.
Oh yeah, and it's one that isn't getting a lot of play actually. People are talking about gold because that's at record highs, and somewhat silver because that has really taken off and is at 30-year highs. But copper, one of the biggest industrial metal, is also at record highs, and then you have a whole host of other ones. Sugar's at like 30-year highs, rubber's at record highs, cotton's at all-time highs since like the Civil War they go back to. So all of these are going to be, have been a big issue this year, and obviously will be next year. But it has a lot of implications on a lot of companies, the consumers obviously, and going forward, it'll be definitely something interesting to watch.
So commodities really across the board, the rally in
Yes.
commodities across the board. Oil, just
Right,
really all
oil's
of
another
them.
one. It has not just been confined to the precious metals, which everyone kind of thinks it has been.
Yeah. You had something, Kevin, that you want to talk about with pertaining to the flash crash that happened earlier this year as being a top story.
Yeah.
From an investment perspective.
Yeah, real quick though, I just want to say something about Tracy's
Sure.
commodity thing. I think that with the dollar continuing to go down and with the yuan, because don't forget, China decided to unpeg their currency from the U.S. dollar. As the yuan continues to go up, it's going to increase their purchasing power, and I think it's going to continue to support demand for all of these commodities.
It's a good point.
But in regard to the flash crash, I put that into my list of top stories, even though the media was kind of done with it after a month or so. But that flash crash, that was one of the biggest events that flushed so much money down the drain for so many people, and it instantly put fear back into the market.
In a short period of time.
Right, and between the euro crisis and the flash crash, that probably caused more people more sleepless nights in 2010 than anything else.
Yeah, good point. Steve, you also wanted to talk about the banks and intertwined with that mortgages and real estate as being top story this year.
Yeah, well, you got to start with the real estate market, which has continued to decline. Home values continue to decline. That's not much of a shock to anybody. And with that, foreclosures on the rise, and then we had the whole processing issue that took place, and it's still kind of out there. But here again, everyone just kind of said, "Oh, no big deal with that. They'll figure out a solution to that problem." But here again, the financial crisis and the Great Recession started because of the events of the fall of 2008, which was that our banks were in trouble, and that's why we had TARP programs and things of that nature. So it seems, I'm going to put quotes on that, seems that our banks are on healthier ground. I put the quotes around because I still kind of wonder, if it's really taken care of, or if we're just kicked the can down the road, meaning if housing prices continue to go down, maybe there is some day of pain out there. But for right now, banking profits are on the rise, their stock prices are firming up, and it's giving people more confidence about the general economy.
All right. That is a hard one, though, to peg because you still hear of bank closures lately. Not as many, but we're still hearing about them drip in a little bit.
But we're on much better footing now.
Than we were.
Yeah.
Yeah, that I think is the bottom line. Tracy, give us your top stock pick of the week.
Well, it should be no surprise. It's Newmont Mining, which is one of the largest gold miners in the world. They do gold and copper, and they have been killing it with gold at these prices. Essentially, they had a record third quarter. They have $4 billion in cash, just kind of sitting there waiting to deploy wherever they deem to build more mines. They are, able to keep their costs pretty low for getting the gold out of the ground, and they have like 60% margins in this last quarter. And then they also have that little copper side business of theirs that's also doing well with copper at the record highs. It's not super expensive here, about 15 times. The stock is near pressuring all-time highs, but they're supposed to have a double-digit earnings growth next year, so it's a good story.
Kevin, I know you're just chomping at the bit to tell us about your stock this week.
Mine is ResMed. They are in the ticker RMD.
Yep.
They are in the medical products industry, and they're a leading designer, manufacturer, and distributor of sleeping disordered products. So it's a huge industry.
Wow.
They're like sleep apnea, this kind of thing.
Okay, I'm glad you clarified that.
So they're a big player. Either way, they've got double-digit growth rates. Their return on equity is increasing. Their profit margins are increasing, and I think this sets the company up for big growth. Also, too, if you look at a chart, they were in an 8-month-long bullish facing pattern. They just broke out of there last week. I think there is a 26% potential gain in ResMed very soon.
All right, Steve R.
We talked about Apple earlier, and I'm taking that as my pick, and no surprise given the strength of everything they're doing. What I think is misunderstood about the firm is that, yes, iPhones, iPads, iTouches, and iThis and iThat are wonderful. But for me, the real profit story is the more those are in people's hands, the more they're going to want to trade in their PC for a Mac computer at home. Yeah. The company has 4% market share worldwide, and that is on the rise. So as they get to 5, 7, 10% market share of PCs, which is a much larger marketplace, the profits will just continue to soar. And speaking of Apple, my wife used her iPhone to record me snoring in the middle of the night, so she might need to learn about the ResMed.
I know.
She might need to learn about that.
Remember, you heard it here first. Thanks for joining us. Merry Christmas or whatever you celebrate, and we'll see you next time.